Hello and welcome to this week's Trading the Trend on the 3rd of July, a Wednesday. And let's have a look at the trades we'll still have on from the beginning of June, because on the 5th of June we went long the spot gold price, as you can see here, and since then have traded around our entry level but haven't been stopped out. I mean, we got in at $2,333 per troy ounce, and you can see we were underwater, slightly in profit, back underwater, but our stop loss was below the May low. So it's really important to place your stop loss as well, because some people might have been stopped out in the meantime, and you have to be patient sometimes with trades. So this one, if you've run out of patience, you might get out now with a small profit, or if you still believe in this trade now that we're starting to break through this May to July downtrend line, you may want to remain long and still keep our upside targets around 2,400, 2,440 in play. If you do so, you can either leave your stop loss at its current level around $2,275 per troy ounce, or maybe you can raise it to our entry level if you wanted to. That way you have a risk-free trade in theory on, at least. And then last week we went short the US dollar basket, and you can see here we did so at 104.85. Since then we've been underwater. As you can see here, we continue to go up, but our stop loss is above the April high at 106.20. So for now, we are still in this trade. I wouldn't change anything on that one. And I think that was from 2 weeks ago, actually, because last week we went short New York sugar futures, but had a stop loss above the early May high in play. And this one got stopped out at 2010 on Thursday of last week. Now, having said that, and I don't normally like to do this, but I'm still very interested in going short sugar. Why? Because if you look at the February to July downtrend line, we're currently, we tested that yesterday and seemed to have failed there. So it looks to me as if we could be coming off again soon. Plus, if I go out onto a longer chart, you can see here that I also have a, actually go much further down, a potential resistance line coming in around current levels as well, all of which leads me to believe that perhaps we could go back down again with regards to the sugar prices, why I want to go short. So today's Trading the Trend is to go short New York sugar futures with a downside target of around 17 and a stop loss above the 200-day simple moving average, and also the April high around 22.65.